So friends, today I will let you know what do you mean by masala bonds. Yes friends, you heard it right, masala bonds. In simple words, masala bonds are issued by Indian corporation. Masala bonds are issued outside India in a foreign country. Masala bonds is like any other bonds. They will pay interest and principal amount on maturity, but they will pay interest and principal amount in Indian rupees. Why it is called masala? It is called masala to give an Indian touch to this bond. Since they are issued abroad, so to give an Indian flavor, masala word is used. Because India is very famous for various type of masala in all over world. So let's begin the introduction of masala bond and let's see the important points which we are covering in this topic. First of all, we must know what is bond. And friends, we have a separate chapter of bond in our syllabus and we have covered it very successfully. A bond is basically a loan that an investor provides to a company or government. It is a type of loan, long-term loan. If I buy rupees 1000 bond with a coupon of 10% and a maturity in 10 years, I receive rupees 100 each every year and will receive rupees 1000 at the end of year 10. Simple. This is the concept of bond. If I invest in a bond, 10% coupon rate, then I will receive 100 rupees every year till 10 year, and at the end of 10th year, I will be repaid my initial principal amount that was 1000 rupees. This is the very simple concept of bond. So masala bonds are bonds issued outside India but denominated in Indian rupee. So if Mr. John based in America or Mr. Lee based in Japan buys such bond, then for them they are buying a masala bond. Fine sir. IFC issues historic 15-year masala bond in London. So definitely they are issued outside India. Fine sir. The history behind these bonds. International Finance Corporation issued a 10-year 10 billion Indian rupee bond in November 2014. The purpose of issue was to fund infrastructure projects in India. Masala means spices and the term was used by IFC to provide an Indian side to it. To provide an Indian touch, they have used this term masala. This is not the first time that a bond has been named after the food or culture of a country. It is not the first time that such name is being given. Chinese bonds, for example, are called dim sum bonds, and Japanese bonds are called samurai bonds. Fine sir. The objective of masala bond is to fund infrastructure projects. So the money which is received are normally invested in infrastructure projects in India. Fuel internal growth via borrowing and internationalize the Indian currency. The bonds are directly denominated to the Indian currency. So Indian companies who are issuing such bond will not face any foreign exchange risk. They will pay in rupee interest and principal amount. So they don't have to go to exchange bank to convert rupee into dollar. So in that sense, they are taking no foreign exchange risk. Fine sir. The cost of borrowings via masala bonds could also turn out to be lower than domestic market. So the cost of borrowing is quite lower than the domestic market. Let's say in domestic market, if the company will have to pay, let's say 10% or 12%, in foreign market, they can offer only 4 to 5%. So in that sense, they are saving a lot of interest amount while issuing Masala bond. If the company issues any bond in India, it carries an interest rate of 7.5 to 9%, whereas Masala bonds outside India is issued below 7% interest rate. Advantage to investors. The investors are exempted from paying tax. India being fast growing economy, investors are willing to take calculated risk for good returns. Many investors wants to invest in India. So definitely it is a calculated risk which will give them good return. Currently these bonds are listed on London Stock Exchange. The Reserve Bank of India allowed issuance of this bond on September 29, 2015. Masala bond should have a minimum maturity of 5 years and there is a $750 million per year limit for borrowers which can be exceeded with the RBI approval. So RBI keeps on changing their norm. So definitely Masala bonds are very popular nowadays. Who can invest in Masala bonds? Foreign investors can invest in Masala bond. HDFC, NTPC, India Bulls Housing are among Indian corporates which have raised funds via this option. HDFC raises rupees 3,000 crore in first ever Masala bond issue. So now whenever you will read such news, you will know what are Masala bonds. Masala bonds have become the hot instrument for Indian companies. Interest on Masala bonds to be tax exempt. RBI eases overseas borrowings limits Masala bond rules. NTPC raises rupees 2,000 via Masala bonds. India plans $750 million of Masala bond sale to build roads. ADB lists 10-year Masala bonds worth rupees 300 crore on India INX. Kerala, first state to list Masala bond in overseas market. So friends, all these news will help you to explore you more and more in finance field, and my only objective is to teach you in such a manner that you can learn more and earn more. Now anybody who will ask you about Masala bond, you are well prepared. So let's play a video and let's see the listing of a Masala bond and the practical aspect of the listing. Fine, sir.
The first ever rupee denominated bond by an Indian company was launched today. HDFC Limited launched what's termed the Masala bond in the land of James Bond at the London Stock Exchange. Radhika Iyer spoke to HDFC's Deepak Parekh on the Masala bond and what that can mean for India.
At 8 a.m. when the London Stock Exchange opened, the Masala bond listed first was welcomed with a roaring applause. Within a minute came this video of Indian Prime Minister Narendra Modi.
James Bond, Brook Bond, Rupee Bond.
HDFC Limited is the first Indian company to do so, raising 30 billion rupees. It has a maturity period of 3 years and a yield of 8.3% a year. That brought some cheer which went missing for a little over a month at the London Stock Exchange since Britain voted to leave the European Union, causing the pound to fall sharply. UK's Finance Minister Philip Hammond welcomed the landmark listing. In a statement, he said, "I'm delighted that HDFC has chosen to list this landmark bond in London. It represents a major vote of confidence in London as the leading global financial centre and is further proof that Britain is a great place to do business." The target investors have so far been Asians, mainly of Indian origin. Rupee-dominated bonds can raise more money for India and also give international investors higher yields. Some buyers include sovereign wealth funds.
This now enables future issuances by Indian corporates to do is to raise finance in Indian rupees in the international markets. And what we have demonstrated, building this market up over recent years, is that international investors are willing to invest in the Indian rupee and take rupee risk.
Just as the first ever rupee denominated bonds have been launched, the hope is that India goes a long way and other members of the corporate India follow suit. The rupee denominated bond, Masala bond as it's called, is sounding as promising. Radhika Iyer from the London Stock Exchange, NDTV.
So I hope you like the video, and it will definitely encourage and motivate and make your practical learning more and more clear. Fine, sir. Masala bonds are the bonds which are issued by the Indian company. They are issued outside India. They are denominated in Indian rupee. Interest and principal repayment are done in Indian rupee. The issuer company do not take any foreign exchange risk. Tax is exempt. Investors can take calculated risk with the objective of good return. Many Indian companies are issuing Masala bonds. There are also RBI regulations which needs to be followed. So many things we have learned regarding Masala bond. So I hope it will help you a lot, not only for your exams, but also cracking your interview whenever you will enter into finance career. Because fundraising is a finance job, and Masala bond is also a type of fundraising. Fine, sir. So friends, I will continue sharing you such type of videos. So do subscribe this channel for future updates. Thank you so much.